Hello everybody. Interesting things to talk about this week. We'll start with the earnings season. Some interesting cases there. Spotify has for the first time presented a profit to the investors, showed results with a profit, and therefore the shares have benefited from that. So that was unexpected. But there's been some case studies on the opposite side of the coin that didn't do so well. For example, Alphabet, Google's parent company, didn't perform as well as many investors expected. Although the bottom line was positive, expenditure was higher than what most people thought is healthy at this stage. Alphabet justified that with investments on their Google business, etc. But not everybody was convinced, and so shares suffered and lost some value. We've also had Snap presented good results in terms of customer fidelization. So they reckon they will be able to keep the current level of users at least for the next quarter, which was very positive news to the ears of investors. Disney also did well, mainly because of their TV business. And of course, Amazon, once again, results not really aligned with the higher expectations of investors. But overall, the earnings season has been positive. So we've had more than 70% of companies that reported showed figures that actually surpassed the expectations of investors. So a good earnings season so far. The markets have been quite bullish as well on the back of a very strong January. We must not forget that January was actually the strongest month in US stock markets, the strongest January in US stock markets for the last 30 years. I mean, it's hardly surprising considering what happened in December 2018. Of course, December 2018 was the worst December since 1929, so almost 90 years ago. But overall, the positive results have had a positive response from investors, and markets have been bullish. Also, the government shutdown came to an end, which also helped. However, President Trump's, with his State of Union speech on Tuesday night, may not have helped so much the mood at that level, since he reiterated his intention to build that famous or infamous wall, depending from which side you're looking, with Mexico, and getting the funding for it and threatening with a potential new shutdown. Looking at what's been happening this week and projecting ahead, we can say that very clearly, although the results of the actual companies have an impact, they don't have that much impact. What will really determine the performance of the markets in 2019 will be two main factors, or perhaps three, if we want to include Brexit. But really, the two main ones will be how the trade talks between the Chinese and American authorities will go. Will those come to a positive outcome? And what will the Fed do? We all know that the trade talks are, and the trade tension that underlies all of this issue represents the greatest threat to global economic growth, and therefore to the markets as well. And of course, the policies of the Fed, the tightening of monetary policy that seems to have come to a pause. Very positive speech by Jerome Powell, by the way, on Wednesday night, reiterating the positive and the healthy status of the American economy, which is actually diverging strongly from the rest of the world. And in the long term, this may not be so good for the US. But for now, America is doing well, but the Fed is still holding on to their pause. I mean, after such a U-turn, will not be easy to go back to raising interest rates again in the short term. So markets, music to their ears, all happy for now. Elsewhere, the pound is showing some signs of weakness, hardly surprising considering how this Brexit saga is unraveling. There's still no resolution in sight. I mean, Theresa May is once again trying to negotiate or renegotiate a deal with Brussels. The controversial backstop point is proving to be very, very difficult to work around. but nothing really in sight. If anything, the chances of a hard Brexit are actually higher now, since Theresa May said that there may have to be some sort of backstop in there, and of course hardline Brexiteers will never accept that. So the pound is suffering, dropped below 129, which is something we hadn't seen in more than 3 weeks, perhaps even more actually. The dollar, remaining on Forex, the dollar is doing well, is finding traction, of course. American economy doing extremely well. Despite the Fed pausing their monetary tightening policy, investors are still confident on the dollar. Excellent payrolls on Friday, 304 versus 165, which was the consensus. So the 100th consecutive payroll session with positive figures, and so the dollar is still strong. The euro not so strong at the moment, because Europe is not doing well, especially Germany. Figures coming from the German economy not showing very good signs of strength there, and in fact Germany is probably technically in recession now. And this is all we have to say for this week.